All right, let's talk about something huge, wealth. And I don't mean the Lamborghinis or the giant mansions you see on Instagram. I mean the real, actual, durable stuff that buys you freedom. We're going to completely redefine what it means to be wealthy, using some amazing insights from folks like investor Morgan Housel and author William Bernstein. So first things first, let's just tear down the biggest myth out there.
This quote from Morgan Housel, man, it just nails it. It gets right to the absolute heart of the problem. We see all the flashy spending and we think, wow, that person is wealthy. But we're getting it completely backward. The desire to spend $1 million isn't a desire for wealth, it's a desire for consumption. And believe me, those two things are mortal enemies.
So let's dive into our first big idea, this counterintuitive concept that real wealth, well, it's actually invisible. I want you to think about it this way. Every single dollar you see someone spend on a flashy car is a dollar that is now gone. It's not in their bank account, it's not invested, and it's definitely not growing for them. Real wealth actually starts with the discipline to not buy that car, even when you can technically afford it.
And it's the exact same principle with that expensive watch or those designer clothes. You know, the trap here, as Housel points out, is that we often buy this stuff to signal to other people how much money we have. But that's the great paradox, isn't it? Spending money to show people how much money you have is literally the fastest way to have less money.
And you know, every one of these decisions counts. Saying no to that first-class upgrade, that's another brick you're putting in the wall of your financial fortress. See, wealth isn't about one giant lottery win. It's the sum of thousands of tiny, disciplined choices you make every single day.
Okay, so this is the definition we need to burn into our brains. Wealth is simply the financial assets that haven't been turned into visible stuff yet. Think of it like this. Wealth is the engine, not the loud exhaust pipe.
You know, it reminds me of this great little story about a grandfather on a river. Whenever some massive, extravagant yacht would cruise by, he'd just nod over to some guy in a simple little fishing boat and say, "The richest man on the river right there." He just got it. He understood that the real wealth wasn't in the yacht itself, but in the discipline it took to not buy one in the first place.
So, we've defined wealth as the money you keep, the money you don't spend. Great. Now, how do you make that money grow? Well, it's not about luck or guesswork. Turns out, there's a science to it. In his incredible book, The 4 Pillars of Investing, William Bernstein makes this awesome point. He says building a successful investment portfolio is a lot like building a sturdy house. You have to understand your materials. It's not magic. It's a discipline.
And these are his 4 pillars: theory, history, psychology, and the business of investing. Now, for this explainer, we're really going to zero in on the first 2, starting with what is the absolute bedrock of all investing theory.
And this is it. This is maybe the single most important concept in all of finance. Risk and return are tied together at the hip. You absolutely cannot separate them. If you want the chance to earn big returns, you must be willing to take on big risks. If you want total safety, you have to be okay with tiny rewards. There's just no way around this fundamental law.
Okay, so let's look at why history is our best friend here. This whole no guts, no glory rule isn't just some abstract idea from a textbook. It's a lesson that financial history has taught us, sometimes brutally, over and over again.
Take a look at this chart of U.S. bond rates. You can almost think of it as a nation's fever chart. See those huge spikes? Those are moments of absolute crisis and fear. When everything's calm and assets are expensive, there's just not much room for them to grow, which means future returns are going to be low. The best opportunities, the highest potential returns, are actually born from chaos when prices have been smashed down.
And this leads us to a conclusion that feels completely backward. Everyone loves to pile in and buy after a huge market run-up, right? When things feel euphoric and safe. But history shows us that's precisely when future returns are likely to be the worst. The real golden opportunity is when everything looks awful and past returns have been terrible.
So why is it so incredibly hard to buy when things look bleak? Well, it comes down to our own psychology. Like Morgan Housel says here, pessimism is just, well, it's seductive. It sounds smarter. It grabs our attention. When someone tells you danger is right around the corner, you listen. When they say everything's going to be fine, you kind of roll your eyes.
And this is where it all comes full circle. The very thing our brains are hardwired to fear, pessimism, uncertainty, scary headlines. That is the exact environment that creates the low prices that history tells us produce the highest long-term returns. Our psychological instincts are often in a direct fight with a rational investment strategy.
So let's pull all these ideas together. Let's assemble our new toolkit. When we combine this new definition of wealth with the fundamental laws of investing, we can start to build a really powerful path toward financial freedom.
It all comes down to 4 core principles. First, get your goal right. Wealth is what you don't spend. Second, understand the price of admission for getting growth. You have to accept risk. Third, you've got to learn to see fear not as a red flag to sell, but as a potential green light for opportunity. And finally, always remember the ultimate goal: real financial freedom and independence, not just the fleeting appearance of being rich.
Ultimately, every financial decision you make comes down to this one question. Are you playing the game to look rich, or are you playing the game to actually be wealthy? Are you optimizing for the stuff you can show other people, or for the financial assets that nobody sees, the ones that are quietly working in the background to build you a life of freedom and choice? That right there is the whole game.